The US dollar is lower versus the major currency pairs in trading here today. I'll take a look at the three major currency pairs, the euro versus US dollar, dollar versus yen, sterling versus US dollar, from a technical perspective to kickstart your trading day and new trading week. So let's get started. We are seeing new extremes in the three major currency pairs in trading right now as I speak. The U.S. Stocks are moving lower after 5 days of gains, with the Dow Industrial Average down around minus 261 points. The NASDAQ index is getting hit harder, with down about 230 points. U.S. yields are moving marginally higher. Let's talk about the euro versus U.S. dollar. We're going to focus on the hourly chart, and we are approaching a key level right here. This is the 100-day moving average back here in the month of November, or mid-November. We are December 1 here today, by the way. The price moved up toward that 100-day moving average, found willing sellers within this swing area through here. Over here, even we went a little bit above the moving average on 1, 2, 3 separate occasions through here, but could not sustain momentum, and price ultimately moved to the downside. The retesting of this moving average will be a key barometer for both for buyers and sellers. If the price is able to move above that level, then this swing area, I'm going to put it on the 4-hour chart to show you where it derives from, all the way back to here. These lows here form this floor before becoming a ceiling through here, then moved back above it, became a floor through here. Again, we moved a little bit above it here and also above the 100-day moving average, as you can see, but then found willing sellers against that level. So this whole area right here, starting with the 100-day moving average up to 1.16596, will really be some resistance. You might even extend it up to these highs right through here. Of course, the high prices that we saw in the month of October. But be aware of that we're coming into an area where there's a lot of technical reasons for the market to potentially find some resistance. If we do get above it, however, that increases the bullish momentum and should lead to further gains for this currency pair. Going back to the hourly chart, today's move was helped by basing against the 100-hour moving average in the swing area. Recall from the end of last week, we did close the week near the 50% retracement of this last move to the downside. So that was another indication. We tried to move higher, move lower, and then once we moved back above the 50% retracement level, we saw increased momentum all the way up to the 100-day moving average. So the bias is definitely in the buyer's favor. Let's take a look at the dollar versus yen, and this currency moved lower. There are comments from Bank of Japan's Ueda signaling more clearly that the Bank of Japan was looking to tighten rates, and that helped to strengthen the yen, weaken the U.S. dollar, send the dollar versus yen sharply to the downside. We are currently down minus 0.82% in this currency pair. That's the biggest mover of the major currencies in trading here today. And we're in the process, we've moved below the 50% of this last move to the upside. This is the consolidation period right through here. And after a move higher through here, that consolidation base right here moved higher. We're breaking below the 50% retracement in trading here today, and that's going to be close risk now for traders as long as the price remains below that level, 155.34. The bias remains to the downside. We're also moving below this level right through here near the 155-ish type level. This level was defined by a ceiling through here, high here, high here, high here. Then we moved above the ceiling and tried to use that as a floor right through here. We did fall below that floor, not once but twice here, but then reestablished support here before moving to the upside. So this area was also important near the 155 level, 155.04. That might even be closer risk for you, for traders in trading today. If we do move back above it after this break, currently in the hourly bar, we could see some retracement back up toward the 50% retracement. Just keep that area in mind for your trading, but certainly the sellers are more in control. On the downside, we have the 61.8, and then we look toward, again, this old ceiling here, which was pretty key right through here, through these days right here, 1, 2, 3, 4, 5, 6, 7, 8, around 7 or so trading days where the price bounced against that level before breaking to the upside. Admittedly got a little wonky here, but what I like about it is how it held support here before moving to the upside. So that level is another key target down near the 154.45-ish type level for the dollar versus yen. Finally, the sterling versus US dollar, that too is breaking to the upside and making new highs. And in the process, we are looking to get above the high price from last week, the high price going back to October 29th. That level comes in near the 1.3267 level. As you can see, we're currently trading at 1.3264, so just below that level. We just broke above the 50% retracement of this move to the downside. That 50% retracement comes in at 1.32399. So getting above that level now makes this level the close risk level for traders. As long as the price remains above that level, the bias remains more to the upside. Next target obviously comes in against this level, 1.3267 level. If we get above that level, then the next target comes against the 61.8% retracement. Way up here is the 200-day moving average of 1.33136. So that's the roadmap for the pound versus US dollar. So there you have it, a kickstart look at the three major currency pairs, the euro versus US dollar, dollar versus yen, sterling versus US dollar. From a tactical perspective, my name is Greg Michalowski. Good fortune with your trading. Bye-bye now.